Welcome back everybody to the 8th episode of Quickfire Crypto, where we keep you informed on a bi-daily basis. If you're interested in keeping up to date on all things crypto, then subscribe to the channel. We put out a new video every 12 hours. Now today we're going to be talking about an article I've found in the Financial Times titled "Crypto Miners Hit Hard in Digital Asset Industry's Downturn," and we're going to be talking about the importance of an asset's price and what pressure that puts on the companies that mine it, and in particular profitability. So let's get straight in. We start off by saying crypto mining companies are coming under heavy pressure from this year's digital asset downturn, as the high cost of energy and the flatlining price of coins pushes more names close to the financial cliff edge. Nasdaq-listed Core Scientific warned last week it could file for bankruptcy protection as its cash resources would be depleted by the end of the year. On Monday, London-listed Argo Blockchain echoed that gloomy outlook, saying it may be forced to cease operations after a critical fundraising fell through. Those warnings came only weeks after US's Computer North, which operated data center services for miners, filed for bankruptcy, owing up to $500 million and blaming tough market conditions. Now, the reason that Computer North, in this case, and many other mining companies blame tough market conditions is because if you imagine they're mining Bitcoin day in and day out, they have running costs, which is in Bitcoin's case is electricity, and they have to also find the funding in the first case to buy the miner, which in Bitcoin's case is a computer, an ASIC computer, and so if, for example, you were mining Bitcoin last year when Bitcoin was $69,000 each, you were making because you get paid in Bitcoin, you were making a huge profit with that same equipment and same running costs than if you were mining it today, just because the asset that you're going to get paid out in is only $20,000 now, going by Bitcoin's price today. So it's a huge. So if you've bought all that equipment and you've done your forecasts for the following quarter or the following year, and you get an unexpected drop in the price of the asset that you are mining, that's not good. That's going to be a real headache, and it's no different to the precious metals mining industry in many ways, because if you've spent any time in looking at precious metals, gold in particular, when the price of gold per ounce goes up, it becomes hugely profitable for companies to start opening up mines and start doing more exploration to try to look for new mines that previously undiscovered in all parts of the world. And so likewise, if the price of gold goes down significantly or enough, it makes mining unprofitable, and so you can't. And so companies start ceasing operations, because the asset that they're getting paid in, or that they're actually mining, is going to be gold, and they've got to sell that gold to then pay for their operations, which will be staff, the electric, the running costs, everything. So it works in a very similar way, and So right, the next part of this is the downturn has already claimed a series of once prominent crypto firms such as lending platform Celsius Network and Three Arrows Capital, the hedge fund. Now that's not really anything to do with mining, because I know that Celsius Network and Three Arrows Capital in particular went out of business. Well, they went bankrupt, and a lot of people got hurt in that. But that was because they were over leveraged. That is to say that they took on a huge amount of debt and couldn't afford to pay it back. So that's what happened with those guys. The crypto winter is having negative ramifications for the overall ecosystem, including the miners. It's a chain reaction as this long, cold crypto winter continues, said Dan Ives, Managing Director of Wedbush Securities. Industry analysts and executives have questioned the sustainability of mining, especially after prices of leading tokens have been range-bound since June. Bitcoin has rarely risen above $21,000 after reaching a high of almost $70,000 late last year. And we've got a lovely colourful graph just showing over the last year how much the change over the past 12 months in miners switching off, basically. It goes on to say miners play a crucial role in the operation of so-called proof-of-work tokens such as Bitcoin. They verify new blocks on blockchains, effectively taking on the role as guarantor that deals are trustworthy in a system that bypasses third parties such as banks and exchanges. In return for mining, they are rewarded with new tokens. Ether, the world's second biggest crypto token, recently moved away from the type of system that requires miners. Many miners were enticed by ever rising prices for coins. When the price of Bitcoin crashed in 2021, companies poured money into buying mining equipment, including fast computers that suck up large amounts of power. And that's the ASIC miners. That's a very specific machine, computing machine, basically made solely to mine Bitcoin. Hut 8, a mining company, added 9,500 machines for mining in the first quarter of 2022, increasing its capacity by nearly a third. So you can see what I mean by this, in that this Hut 8 have purchased all these, 9,500 machines. That's in the millions now, millions of dollars for that startup, and they're mining something. If at the beginning of the year, when they've decided to buy it, or when they've decided to raise capital for this particular venture, they are expecting to be paid in Bitcoin, which is obviously what you get paid in on the mining network, and that's only worth $20,000 now. Then it may be that it's just not profitable for them to continue with that operation. And vice versa, if it goes up, you can have unexpected profits if Bitcoin decides to shoot up now, for example, to 40k, and that's the price you pay for in crypto. It's very, very volatile, and that can be a good thing and it can be a bad thing. You just have to be careful. The extra mining capacity has arrived on the market just as the price has tumbled, meaning miners are racing harder to win the token. Bitcoin's total hash rate, the computing power directed towards mining, has increased by 57% in the last year to a record 260 exahash or quintillion operations a second, according to Hash Rate Index. Now, my suspicion is that when Bitcoin initially dropped, which was the back end of last year, that all these machines, the hash rate went down so much that all these miners, the mining computers, had to be switched off, and people start selling that equipment, and it flooded the market. I saw loads of ASIC miners on websites like eBay and secondhand stores like that, and so I think because they're so cheap, people have been buying them, waiting for the price of Bitcoin to go up so that it becomes profitable again and they can switch their machines back on, and they've taken advantage of all these cheap machines that have been floating around in the market. It goes on to say, the high cost of energy has also caught many out and punctured miners' ambitions. Miners race against each other to solve complex mathematical puzzles and earn Bitcoin. They expend large amounts of energy regardless of whether or not they claim the Bitcoin before their competitors. Argo admitted that energy costs for its Texas facility were nearly 3 times the average price for August. And then lastly, we've got, that has been exacerbated by the threat of energy blackouts in the US. In July, Argo, Core Scientific and Riot Blockchain scaled back their Texas operations as demand for energy threatened to overwhelm the power grid. That's another thing with Bitcoin, is if you plan to mine Bitcoin, you cannot be having blackouts. You need to keep that machine on constantly. Otherwise, again, that affects your profitability. And you'll be penalised. The blockchain network will penalise you for not having a 100% uptime. So that's very important as well, that you have a stable, wherever you do set up operations, that you have a very stable electricity supply going on into the future. So That's it for this article. Remember everybody to subscribe to the channel, join our team. We'll keep you updated on crypto every 12 hours. Smash the like button if you feel you got value from this video, and I'll see you all in 12 hours.